Good morning, dear audience, to today's question and answer session on the eligibility of the Alpine Space Program 2021 to 2027. I would like to welcome you on behalf of MA and chairs of the program to today's session. My name is Magdalena Friedwagner-Meislinger. I am Program Officer at the Program's Managing Authority, mainly dealing with finances and audits. So all this financial issue stuff. As you know, today's session is focusing on the financial planning and implementation of projects in the new program period. I will be accompanied by two colleagues of mine. It will be Wolfgang Schrattenecker, also Program Officer at the Program's Managing Authority and mainly dealing with financial and control issues, and Elisa Kerschbaumer, Project Officer at the JS. So today's focus is the eligibility rules, but as you know, we do have a series of Q&A sessions for the first call of project proposals. So you may have already attended the first session that took place last week and was dealing with quality project proposals, so more content-related input and the strategic input, how you could set up your project. There will be a third session that will follow on the 10th of February, mainly dealing with the GEMS and technical information and how you have to prepare your application in this monitoring system and how to submit your project application then with this tool. For today, we foresee to have an interactive session. So we will provide you with some input on three core topics. The one concerns the general eligibility aspects, so some general rules that have to be met and fulfilled by you and by your budget. Then there will be a second focus presenting the cost categories as such and the related calculation options. So this will be an intro into this topic of cost categories. And the third part will then provide you with detailed information on the single cost categories that are part of the Alpine Space project budget. And between these three different rounds, you will have you have the possibility to address your questions, and between these three different rounds, we will try to provide you as much feedback as possible. So we are really thankful for being addressed with questions. This is also kind of testing. We would like to make sure that our rules are clearly understandable. And in case we see that there are some questions marks, we will ensure that in question and answer section of the program, additional information and guidance is provided. So far, here a short intro into today's content. I would like to pass over now to Elisa. She will be the link to the audience, so she will collect your questions and will now provide you with some input on how it will work and how it will look like. So Elisa, the floor is yours. Thank you.
Thank you, Magdalena, and hello and welcome also from the JS side. We will repeat again the exercise we did also last week for those of you who followed the first Q&A session. So basically the interaction with you will be done through Slido, and for these I invite you already now to open a new tab in your browser, go on slido.com and use the hashtag ASP eligibility. Some of you did it already because we already saw that some questions arrived in a few minutes ago. And just to warm up everybody and make sure that you are connected with us on Slido, we have prepared three simple questions, which I invite you now to answer with me. So we are sure that we are all connected. And I will now launch the first one, which you should see on your screen. So first of all, we would like to just see briefly who of you actually attended also the Q&A session we had last week on quality criteria and who did not. So I'll just give you a few seconds to reply to this question. We won't take too long, of course, because it's really mainly a warm-up and a way to attract your attention on Slido. I see that so far most of you actually did attend also last week and are here again. So hopefully it wasn't too bad last week. Okay, I see that so far nothing else is coming in, so I will just close this question. But overall, I would say that I'm happy to see that you also joined last week. Second question. We would like to know a bit more of who is actually taking part today. So are you newcomers or not in the Alpine Space project? So if you or your organization also maybe in the past or is maybe still now involved in some still running Alpine Space project or not? Here I see at the moment half and half. Well, if so, it's good to see that we have some newcomers. It's of course always good to have new actors involved. Slightly decreasing, but still some newcomers are there. Okay, so maybe we can stop this now. I see that in the meantime, some more people are connecting, looking at the answers receiving. Okay, and very last question. Are you normally involved in project financial management and reporting? So we have a bit an overview of who of the people attending today are actually familiar with financial issues or will then actually follow financial reporting issues if the project should be granted financing. So let's see. Of course, like normally these kind of sessions are avoided by people who are not really necessarily involved into these kind of financial issues because sometimes they might be a bit boring. And I see that most of you will actually be involved in the financial management and reporting. So I guess that I can close it now because I see you are with us. And I will therefore now leave back the word to the colleagues of the MA. As Magdalena said, really please make use of this, this possibility to ask questions through Slido. We will make sure that most of them will be taken into account. If something will be skipped or there won't be time to reply, of course, we will follow up afterwards, but really please make sure that you use that because we are here today really to answer your questions. So don't be shy.
Good. So thank you, Elisa, for this short intro and warming up questions. So it's good to see that it's a kind of mixture between newcomers and experienced Alpine Space experienced project manager. We see that most of you have experience in the financial management and planning of projects. So I'm quite sure that Wolfgang will satisfy both your needs, those that do not yet know the Alpine Space rules of past periods, and also those that are very familiar with it. You will see that there are some differences, and you will learn about these now soon. So I would like to ask now my colleague Wolfgang to start his presentation and to provide the input, especially on the general principles of eligibility, before we are coming back then later on to your first questions on this session. So Wolfgang, the floor is yours. Thank you.
Thank you, Lena, for your words, and a warm welcome also from my side. Yes, in the last year, we worked really a lot on the new eligibility rules for the new program period. And I would say, although we had not started from scratch, we could build on the experience made in the period 2040 to 2020. we had a lot of internal discussions, exchange with stakeholders, with beneficiaries, with controllers, with program bodies. We did reality checks, and all these efforts were made in order to go into one direction, into the direction of simplification. We really tried to include and introduce as many simplified cost options as possible wherever they make sense. We have them now. We also tried to harmonize with other programs. This will be, of course, of advantage for beneficiaries taking part in several programs, for instance, but it will also make the life of our controllers easier. And we did, last but not least, also one perhaps little step. If you remember, if you know from the past period, the eligibility rules were a quite thin document, a fact sheet. We put it now into the program manual as part of it, and it should also facilitate your work. If you are interested in a certain issue, you can use the search function, and you will find all the relevant passages for relevant passages within a short period of time. And this should also be, I think, very helpful for your work. The next slide, please. As regards the legal framework, I think I will not lose too many words on that, but I think it's important that you have heard already once about the main legal sources. The most prominent one is for sure the Common Provisions Regulations, and as regards the eligibility, you will find in Articles 63 to 67 relevant information as regards our eligibility rules. As regards to cost categories, detailed information on the cost categories, there are rules in Articles 37 to 43 in the Interreg regulation, and also in the ERDF regulation, in the fund regulation, there are some relevant articles. Beside that, of course, beside these three main legal sources, we have, of course, the financial regulation to be obeyed, and where applicable, also national law to be obeyed. And then the next slide, please. When it now comes to the hierarchy of these rules, this is regulated in Article 37.3 of the Interreg regulation. And this article says that for matters not covered by the eligibility rules laid down in the regulations, in the three regulations I mentioned beforehand, or for matters that are not specified and complemented by the program in our rules, for those matters, the national rules apply. The national rules of the country in which the expenditure is incurred. So everything which is not covered already, every national rule does only apply if it is not already regulated on a higher level. This is what I wanted to say. Okay, and then the next slide, please. It's the slide on the project phases. I'm sure that those ones among you that participated already in the past period will know this graph. As regards eligibility, we have 3 project phases in the Alpine Space. The pre-project phases covering all the activities needed for the development, for the setting up of the application form for the project preparation. This period ends with the approval of the PC, or with the project start date. Then comes the project implementation phase, where the beneficiaries have to implement the activities in line with the application form, and it lasts from the project start date till the project closure date. And after the implementation phase, we have the post-project phase. This is the phase where the lead partner shall provide us with the final report, and therefore is the end of this phase, the deadline for the submission of the final progress report. What does it mean for the eligibility rules? As regards concerning the pre-project phase, the project preparation phase, for the activities, or for the for the expenses for activities for project preparation, you are not allowed, or beneficiaries are not allowed to report these costs on a real cost basis. There's no way to report it on a real cost basis. But for classical projects, so for the big ones, the program offers a lump sum. And the lump sum amounts to 23,000 euros total costs. And when we consider the program's co-financing rate of 75%, it means that the beneficiaries, the project partners, will get a sum of 17,250 euros ERDF. This amount, the 17,250 euros, can be shared among the partnership. And in principle, you are relatively free how to share it. So it will be perhaps according to the involvement of the single partners in the project preparation work. Would be one possibility. But in principle, you are free. There are only two restrictions. The first restriction is that this lump sum can be shared only among EU partners. So partners from Switzerland or from Liechtenstein, I'm sorry to say that, but they are not allowed to profit from this lump sum, as they are not allowed to get any ERDF funds. And the second restriction is that among the EU partners, if there is any partner that receives already a national subsidy for project preparation and seed money, whatever, also these partners shall be excluded from the lump sum. So in this case, if there is a partner receiving a national subsidy for project preparation, the 17,250 euros or 23,000 euros total costs can be shared among the rest of the EU partnership. So to be clear on that. And for small scale projects, I'm sorry, there is no compensation foreseen for the project preparation costs. Then during the project implementation phase, beneficiaries can report their costs on a real cost basis or on flat rate basis. We will hear on that a bit later more. The only thing I would like to say, please foresee already in the project implementation phase, in the last reporting period at least, already sufficient time and resources for the project closure. Why? Because you will not be allowed to report costs for the project closure for activities of if the activities of the project closure take only place in the project in the post-project phase. You will not be allowed to report these costs to us, because in this phase the costs are ineligible. All the costs, with one exception, the costs for the verification for the last period by the controllers. So this is one exception there. So this was already, I think, my last slide for the first part, and therefore I would say we start now with the questions.
Yes, here we are. And so thank you, Wolfgang, for this first part of presentation. I see many questions arriving, and I'm trying to sort them out a bit, like compared to what has been presented so far. So one first question that I would maybe pose you, it's, could you perhaps give us one example for the hierarchy of rules?
Yes, I may answer this question directly. So the hierarchy of rules means that first it's the EU rules that count, then it's the program rules, and then the national rules. But it's meant in a way that if the program rules, for example, foresee something on a specific cost category like the staff costs, where it is intended to have the fixed percentage of assignment method as one method and flat rate as the second one, it cannot be regulated differently on national rules. So the program foresees these two options. We are not intending to requesting any timesheets and so on, and consequently national rules cannot foresee that beneficiaries have to provide timesheets, for example, to first level control bodies. So this would be one concrete example. If it is regulated on a higher hierarchy, the lower one cannot intervene or indicate stricter rules on that.
Thank you, Magdalena, for this one. One second question, which would be nice to reply, it's regarding preparation costs. So as regards the lump sum for preparation cost, what kind of proof for the underlying expenditure is needed?
Nothing. So you do not need any proof. The only restriction is that you cannot report any costs that have occurred before the starting date of the project and later on during project implementation. But for the lump sum as such, I mean, the only precondition is that there is a signed subsidy contract, that there is a signed partnership agreement and so on. And but you do not have to prove anything as regards related expenditure you may have for preparing the project.
Exactly. And there is, I'm scrolling through now, two questions actually, which were very similar. So I will just raise one regarding the eligibility period. So is there a deadline to when the invoices or payments can be accepted by the controllers after the project closure?
There is no concrete deadline. So the only precondition is that the activities have been implemented before the project closure, and in best case, the invoice has been issued already within the period, but even this is not a precondition. So the precondition is that the activity took place in the project implementation period. What has to be ensured anyhow is that it is agreed with your FLC body, because you have to ensure that the expenditure has occurred and can be verified, so has been paid, and even the process of first level control can be concluded before the project has to submit its final report, including all certificates of expenditure. And here the projects regularly do have 2 to 3 months to submit the final report. So there is no fixed deadline, but it should be close to the date of project closure. Otherwise, you may face the situation that the related expenditure cannot be confirmed timely and that the report cannot be submitted, including this expenditure, and consequently the respective beneficiary couldn't request the related ERDF co-financing.
I would now take maybe two questions which are still a bit like general, and then we'll leave the other for the next two parts maybe. So one question on the general side, is it necessary to provide a detailed cost plan already in step 1?
No, it is not necessary to have a detailed costs plan. So the financial tables that are included in the application form will be hidden for the first step and will not have to be part of the step 1 application form. What anyhow has to be provided is a rough indication on the estimated total project costs. And this information should be included in the section A project, I think it's called project summary. So here it would rather be one sentence to state with which budget you are currently calculating, but no details on partner level and no details on cost category or work package level. And it still can be then accommodated within the second step. So it's not a binding figure, but it should give a rough information only.
Mm-hmm. Exactly. And I would maybe take this last question for this first part. Does the budget of a Swiss partner count to the maximum 3 million budget of classic projects?
Yes, so the 3 million really refer to the total budget. The total budget consists of the budgets of EU partners, but also on the one of non-EU partners. So here the 3 million includes the Swiss partners' budget.
As well, exactly. And I just saw now that maybe we can still take another one about reporting. How exactly does the reporting and the submission of costs work?
So the reporting section in the GEMS, in the electronic monitoring system, is currently still developed. We do not have yet all details available, but it will be similar, I assume, to the period 14 to 20, where you would have to report in a list of expenditure, the single expenditure items, and would transfer then your partner report, including this list of expenditure, to your first level control body. So the body on national level that was authorized to verify your costs and to certify your costs. And then this body would check the single expenditure items and the supporting documents you would have provided to the body in parallel and would confirm the expenditure in the system. The lead partner would collect the different partner reports and would summarize it in a project report. The project report is submitted to the JS, assessed and verified there, and then it will be the managing authority and its payment function to initialize the related ERDF payment. So this would be this general procedure. We foresee that the reporting itself would also take place on a 6-monthly basis for the classic projects. And I mean, you could calculate that if you, for example, have the period January to June, you would report in September, and you probably would receive your funds in the co-funding in November, I would say, in best case, if everything works smoothly.
Mm-hmm. Thank you, Magdalena. At this point, I would then maybe leave the word back to you for the second part of the presentation, and then we will take on the other question in the second part of this Slido connection.
Good. So thank you for your questions so far. Please feel free to add any further clarifications, question if there should be one. Now Wolfgang will present you the second part. It concerns an overview on the cost category and provides you with the first input on the different calculation options that are offered by the program. So Wolfgang, the floor is yours.
Thank you. And now also the presentation is visible again. Many of you will already know that in the Alpine Space we have 5 cost categories. It's staff costs, it's office and administration costs, travel and accommodation costs, external expertise and services costs, and last but not least, equipment costs. You might know from other programs that they have a 6th one, infrastructure and works. We in the Alpine Space, we don't have these cost categories, and therefore also only expenditure falling in one of our 5 cost categories can be considered as eligible and can be certified by the controllers. The next slide, please. The most important cost category in the Alpine Space is for sure staff costs. We recently did an analysis, and we had in the current period 2040 to 20 around 60% of staff costs of all the costs reported. So this is the most important cost category in our program, and there are no major changes foreseen for this cost category. There are still 2 ways to report or to calculate the eligible costs. One is based on real costs. So, and in this case, the fixed percentage method has to be applied. And on the other hand, we have a flat rate option. In this case, you would get a flat rate of 20% on the basis of the external expertise and services costs and on the basis of the equipment costs reported to us. There was also no change compared to the pre-runner period as regards office and administration. There's still this 15% flat rate on top of staff costs. But there is something new for travel and accommodation. You know, we had this in the past period on a real cost basis, and beneficiaries had to collect a lot of little invoices to document them. The controllers had to verify them, and we really wanted to relieve you from this the workload, from this burden. And that's why we are very happy that we have now a 10% flat rate on top of staff costs for travel. And as it is also for office and administration, for these two budget lines, cost categories, the flat rate is the only way to report costs to us. It's the only calculation method offered. As regards external expertise and services and equipment, the costs have to be reported on a real costs basis. But beside that, there is still one new offer, a flat rate of 40% of the eligible direct staff costs that covers all the other costs, all the other remaining costs, all the other remaining cost categories. So you have to report staff costs in this case on a real cost basis with the fixed percentage method. And then you get 40% on top of it without any, as regards at least the expenditure, without any further need for documentation as regards the expenditure. What is important for you to know is that the calculation options shall be fixed for each single beneficiary. So it is not a decision on project level, but on beneficiary, on project partner level. And this decision shall already be taken in the final application form. So you inform us on your decision with the final application form. And the choice cannot be changed anymore later. So as soon as the project is approved, or as soon you submitted the project proposal to us, the application form to us, this choice and this decision cannot be anymore. So you have to think about it. What would you like to calculate, to report on real cost basis, and on what on flat rate basis. The next slide, please. In order to facilitate your decision a bit, and you will find this graph also in the eligibility rules, we have done or provided here an overview on the different possible combination options. There are in principle 3 options. In option A, you will find predominantly real costs for equipment, for external expertise and services, and for staff costs. And for office and travel, you find here flat rates. There are only flat rate calculation is only possible here for these budget lines. In option B, you will report to us, you could report to us equipment and external expertise on a real cost basis, and all the other cost categories then cover with flat rates, the 20% flat rate on top of external expertise and equipment. And on top of this flat rate then, on the staff costs then, the 15% flat rate for office and administration, and the 10% flat rate for travel costs. And the third option, option C, is that you report, I mentioned it already, only the staff costs on a real cost basis via the fixed percentage method. And then on top of that, you will cover all the other cost categories with the 40% flat rate. For classical projects, all combination options are allowed. A, B, C stand open for classical projects. For small-scale projects, there is a restriction and only options B and C can be selected, because we would like to encourage especially also the small-scale projects to use simplified cost options. So there is a limitation for small-scale projects. The next slide, please. And also this tool, the budget simulation tool, should facilitate your work. You can enter here your planned real costs for the three cost categories: staff, external expertise, and services and equipment. So you have to do your estimations, your calculations, and can go then into this tool, enter the three figures, and then the tool shows you what does it mean then for your total budget. So in this case, with the figures inserted here, relatively high amount for staff costs, lower amount for external expertise and equipment. Option A would be the one with the highest total eligible budget then, followed by option C. Option B might not be so interesting. So if you would take your decision only on the basis of the eligible amount, you would select option A, but it could also be interesting to go for option C, where you received a bit less, but you say, okay, the administrative burden is much lower and this is it worth to go for option C. It's a decision to be taken by you. It's your free decision, with the one restriction for small scale projects where option A is not given, is not allowed. Yeah, this was already the last slide for the second part, and we could move to the questions, please, again.
Yes, here we come. Just 1 second that we share the screen for the slider. Here we go. So I would maybe take one step back 1 second, since we were talking about the Swiss participation before. There was one question here which I have to find now because it went away. Okay, so about again Swiss partners. How complicated is it to have a Swiss partner, as they need to apply for separate funding and the deadlines do not match? They also might not get the funding.
Okay, so for this question, I have to commit that we have not received any complaints during the last program period. So I assume that the burdens related to it are not that high and that is not that complicated. We do have very experienced staff at the Swiss ACP. Also, the national coordinator is very much involved in the implementation of the program, and the feedback we always received from Swiss partners is that they are well supported on national level. So here I wouldn't see big administrative burdens on that.
Exactly, no big fears. And now coming to questions more related to what Wolfgang just presented. We have one question here asking, what if the calculation method of a partner needs to be changed during project duration due to objective reasons? Can this be changed during project implementation?
No, so here the rules are quite strict. You have to fix in advance in the application phase which method you would choose for the single cost categories. And there is no possibility to reshift or reshuffle that during the project implementation phase, whatever the reasons would be, because otherwise we would open the door to having it adjusted according to needs regularly. So here the rules are strict. You have to fix in advance, and this will be the rules that will apply for the whole project implementation period. But on project level, just to highlight this, I think that you are probably aware, each project partner can select it by themselves. So it's not that the same rules apply then for all partners. The project partners themselves can select the method that fits best. So in a project, there may be different calculation methods among the partners. Anyhow, those that have been selected in the application form have to be followed during the whole implementation period.
Exactly. And just on this note, I guess, Magdalena, you can also confirm that a partner can choose different options if participating in different projects as well.
Exactly. So here there is no restriction on that. The partner could choose the flat rate option on staff, for example, in the one project, and the real cost method for the other one. So there is no restriction. There is full flexibility on that.
Exactly. I see then like 2 requests of clarification of what has been just presented. So basically one person is asking, will the 30% flat rate also cover the office and administration costs, or they are in addition?
The 30% covers everything. So it's just the staff costs on a real cost basis, and on the staff costs, all other the 40% is calculated, and these cover the travel and accommodation, the office and administration, the external expertise, and the equipment costs.
Exactly. And the second one on this note is asking, can we claim the flat rate for office and travel also in combination with the flat rate for staff?
In fact, it is automatically foreseen like this. So if you go for the flat rate on staff, you would receive 20% of your equipment and external expertise and service costs for covering these costs. And on the basis of the 20% flat rate for staff, you would receive additionally 50% for the office and administration costs on a flat rate basis, and in addition 10% for the travel and accommodation costs on the staff costs flat rate basis.
Give me 1 second, because there was one question which now I can't see anymore, and here it is. Do we have to select the cost option in stage 1 already, or do we have to have it only before the project is accepted?
Step 1 is focusing on the content, so on the project, strategic-wise, on the rough work plan of the project, but not on the finances. So this indication is only to be provided in step 2, when the projects have to submit their project finance plan and budget in the framework of the detailed application form. So not step 1, but relevant for step 2.
Exactly. And I see that the budget simulation table was capturing the attention, because there were 2 questions asking where is available the table and where can be downloaded.
It's on the website, but I think we can for sure share with you, if you cannot find it, the link in the proceedings of this event, so that you can easily access it.
Exactly. On another note, what if I forgot by mistake to tick, for example, the flat rate for office or for travel in the application form? Can this be changed, corrected later after the approval?
We will have to check technical feasibilities, and because for travel and accommodation, the office and administration cost, it will anyhow only be the flat rate that can be calculated. So it may be an automatic setting, but I guess that you would have to confirm that you would like to request the flat rate. What you can for sure not do is to insert any costs on real cost basis for these budget lines. But as mentioned, you have to choose your method ahead of the submission of the application form. So if you would miss to select the flat rate, because it's not an obligation to ask for a flat rate, I would say, and you forget to tick it, it would mean that it is not considered in your budget calculation. And the decision of the program committee will refer to the budget calculation you made, so the one you have submitted. And we cannot approve a higher amount after the approval of the program committee. So at the end, it's very important that you make sure when you submit the application form that you have entered the relevant information for you, that you choose the correct, or for you, the correct cost options, because it cannot be changed after the submission of the application form. So here it is really as selected, it will count for the approval and for the implementation of the project. If you have not selected, it would mean that you are not requesting any flat rate for covering office and administration, for example, and consequently you would not receive an ERDF co-financing for it.
Exactly. And I will take on board maybe now two last questions regarding flat rates, which I see. So one person is asking what will be controlled by the FLC when using flat rate options?
What will be controlled is the basis for the flat rate. So in case of the 40% flat rate, the FLC body will focus its check on the staff costs only. So it will not go beyond this, as this is the only, as these are the only costs that have to be checked on a reality basis. As regards the flat rate, the added flat rates, it will be done automatically by the system, so it's nothing to be counter-checked by the FLC body, or no data to be confirmed as regards the calculated flat rate. What might be is, or what will be requested from the FLC is that they, when they are checking the documents the first time, are making them aware of the budget setup, so that they are well aware of which costs are covered by real costs and simplified cost options. So the only thing the FLC will have to verify is that if there are expenditure covered by a flat rate, they are not reported as real costs in any other cost category they do not belong to.
Exactly. And on this final note, we have also this question regarding flat rates. Since they are not audited, can they be used as co-financing? For example, staff as real cost with 75% funding, use flat rate for remaining cost for 20% staff.
At the end, no one will check what you will use the flat rate ERDF funds for. It is anyhow assumed and well documented that the flat rate is based on a model calculation. So we assume, for example, that there are office and administration costs at each beneficiary level, because you have to ensure that the people have the respective office equipment, the office staff available, that there is an accounting department involved, a staff department involved. And due to all this, we assume that the related expenditure is there, and consequently you will receive an ERDF co-financing for it. What you then do with the ERDF co-financing related to the flat rate, if you have to internally shift it to whomever, or if you use it for whatever, is up to you. So at the end, it depends on your budget calculation, on reimbursement procedures internally you foresee, but generally it is not audited what you will make use of. That's this simplification that is implemented and that is legally supported and foreseen in the regulations.
Thank you, Magdalena. So we can definitely see that flexibility is there. I will now leave the other questions for the last part. So if okay with you, we can go on with the third part of presentation for the last issues, and then we come back with the last final questions.
Yes, it might be that some of the questions are already answered by Wolfgang when he's presenting now the details on the cost categories, I assume. So Wolfgang, please provide us with this more detailed information on the single cost categories and the related eligibility rules. Thank you.
Yeah, thank you. Now I'm visible. Okay. So I would like to provide a bit more detailed information on the single cost categories now, and I will start with staff costs. staff costs based on real costs. As already mentioned beforehand, the only calculation method is the fixed percentage method. In the regulation, I think it is called fixed percentage of gross employment costs. And this method requires that for each employee, an assignment shall be issued per reporting period. So, for instance, if there are 2 staff members working for your project, and it's a classical project with a duration of 36 months, so we have 6 assignment periods or reporting periods. In this case, it would mean 2 staff members, 6 periods. It would mean that you will have to issue 12 assignments for each reporting period and each staff member 1 assignment. As already the name says of the calculation method, fixed percentage of gross employment costs. You see, employment costs are needed. And that's why you need employees. Only staff costs of employees can be considered and can be eligible. That means that payments for self-employed persons like personal draws are ineligible. So company owners without any employment contract cannot charge any staff costs. So this is important to know. Only employees can report staff costs. And the second important issue with regard to the assignment is that it must be issued and signed before the respective assignment period, before the reporting period. Why? Because if you talk to your colleague and tell him, I issued now an assignment for you and you worked the last 6 months for the project, he will say, how could I do that? I didn't know. And the same is what the auditors will say. They will not accept such assignments. It's really important that the assignment is issued and signed before the reporting period, before the assignment period, so that the staff member knows that he should work on the project in the next 6 months. The assignment itself shall lay down in detail the project-related tasks. So you should describe there in detail your activities planned and the time involvement planned. And this time involvement plan will be expressed in a percentage of the total working time according to your employment contract. It's the assignment percentage. And it's very, very important that you properly document how this assignment percentage was determined. How was it calculated? So in principle, you will have to define the tasks to be fulfilled in the next 6 months. I don't know, reporting, control tasks, or in a bit more detailed way already, and calculate or estimate the hours, the dates that you will need for these activities, and then calculate on this basis an percentage. And it's really important that you document this step and that you keep this documentation for controllers and for auditors. And then the calculation is quite simple. You simply multiply the gross employment costs for the entire reporting period for that person with the assignment percentage. And that is then the eligible amount, the eligible staff costs that can be reported to us. So, and one change compared to the previous period, some of you will remember it, in 2014 to 20 period, we have this 6-monthly task report. And this task report is not needed anymore. So we expect more detailed descriptions of activities already in the assignment, and then we will assume that the activities in the assignment will be implemented as indicated there. And only in case of deviations you would have to report to us. How can this take place? In case of minor deviations, you will have nothing to do, nothing to change. So if you have planned to take part in a travel and this was cancelled then, but it has no further impact on the further project implementation, no change needed here. If you have a major change as regards to content, so if you change the schedule of activities, you do you postpone one activity and replace it by another one, but this change has no impact on the assignment percentage, you would have to fill in, you would have not to change the assignment, but you should document it in a note for file and provide it to your controller. And in case of major changes, so that also the extent of the assignment is concerned, then you would have to fill in a new assignment, an amended assignment. You would use then the same template for the assignment. Keep the old one because the old one is valid for the first months, and the new one, the amended assignment, would be valid only from the issuing date of the new assignment till the end of the reporting period. So to sum up, because this is important and we had, especially also in the current accounting year, quite a lot of mistakes as regards this. Before the reporting period, you do the estimation, the calculation of the extent of the assignment, and you document it and you keep this documentation. And at the same time, you will then issue and sign the assignment, the project assignment, before the reporting period. Then comes the reporting period where you implement your activities in line with the application form. And after that period, you will know your gross employment costs. Yeah, and then you multiply after the period the gross employment costs for the entire period with the assignment percentage fixed already before the period. And the result of this calculation, you please report then and insert in the list of expenditure. This is then correctly done. Okay, hope I was clear on that. And then the next slide, please. Yeah, for staff costs, I mentioned it, we have also a flat rate. Here it is a bit easier. The staff costs are calculated as a flat rate of 20% of direct costs other than staff costs. So in our case, external expertise and services, as well as equipment. There is no need to document that the expenditure was incurred and paid. But there is a precondition for this flat rate. It must be proved that there is at least one employee in the beneficiary's institution. So, and this can be proved by a registration, for instance, in the social insurance system. And one further detail, a sole proprietor, a one-man business, cannot claim staff costs. This is also important information, cannot claim the flat rate for staff costs. Okay, the next slide, please. Office and administration costs. I think this is an easy exercise because we have the flat rate, 15% on top of the reported staff costs. As also for the flat rate for staff, there is no need to document that the expenditure was incurred and paid, but of course it has to be requested already in the initial version of the application form. If it is, and it was already also answered by Lena, if it was not requested there, I'm sorry, there's no chance to change this later. And office and administration costs cannot be reported on a real cost basis. The flat rate is the only allowed option. And first level controllers will also check for sure if you insert some costs that are that clearly fall under the office and administration. If you report them, or if you report them under any other cost category, in that case they would have to put it ineligible. So no direct, no reporting of real costs allowed here. Then the next slide, please. Travel and accommodation. In principle, the same applies as for the flat rate for office, with the one difference that the amount is, the flat rate, the percentage is a bit lower, 10% of the reported staff costs. As the same rules apply, I would also here go to the next slide, please. External expertise and services costs. The basis are real costs. You need in any case as a legal basis a written contract or any document of equivalent probative value. So it could, for smaller contracts, also be an email exchange, for instance. But you need, in principle, a written contract between the beneficiary and the service provider, specifying, of course, the services to be delivered and specifying also, of course, the price. Contracts concluded between project partners of the same project are ineligible. And we are very clear on that. They cannot be accepted. Here we see actually an conflict of interest, and this is not allowed. And of course, publicity rules have to be obeyed. Procurement rules must be respected, of course. So, and then the last slide, please. Equipment costs. The basis again are real costs. There is a specific rule for equipment which says that equipment is only eligible if already listed in the approved application form. And if this is not the case and you need some additional equipment, the precondition for eligibility is that you ask the JS for approval, and this request must be in advance and in written, and also the approval must be in written. Otherwise, equipment is not considered eligible. Equipment is only then eligible if not covered already by the office and administration costs. One little example, your basic IT system you use for your daily work is already covered by the office and administration costs, flat rate. But if you have to develop any specific IT tool which is needed for the implementation of your project, it could fall under the equipment costs, of course. So similar to the rule under external expertise and services, equipment purchased, rented, or leased from another partner is not eligible. It is also important to know that only depreciation costs are eligible, so depreciation rules apply. You will have to document in this case that you are applying a proper method, a well-documented method, and you calculate them pro rata with the duration of your project, of course. And also for equipment costs, publicity rules to be observed and procurement rules must be respected too. So far from my side, and if fine with you, I would give back.
Thank you, Wolfgang, also for this last presentation. We have actually a lot of questions that came up while you were talking, and I'm not ignoring the one that received more votes. We will come to them. I just tried to group them a bit depending from the topic. And I see some question regarding staff costs, so maybe I will start from this one. Let's take the first one, staff cost with fixed percentage method. The fixed percentage is estimated regarding tasks. How is it to be verified after the project? How to handle deviations?
It is not to be verified after the assignment period or with the project closure. So here is really that you have to do an ex ante calculation of the intended extent of involvement, but there is no verification foreseen at the end. So you shouldn't, or it's no necessity to have timesheets laying down project-related working hours in a period and then doing a cross-check with the assignment. The only important thing is that you do the calculation, the ex-ante calculation, very carefully, that it is well documented, and that you implement the activities as they have been foreseen. So if at the end, and here you would foresee in the calculation, for example, for an employee that it is involved in 2 work packages, and at the end it is somewhere stated that the project partner was not participating in the implementation of 1 work package, you could face a problem. So here the only important thing is that you stick to the activities that have been foreseen. If there should be changes of the activities, not minor ones, but really essential ones, you would have to adapt the assignment. So this is the only thing to consider. But at the end, there is no verification and no counter check of real costs of real working hours on the project than with the estimated values.
Thank you, Magdalena. I think this partly answers also to this other question, which is what to do when we notice after some months of project implementation that the assignment percentage was by far underestimated and we would like to change it.
So here first it is important that we really foresee to have the assignments established for the single reporting period. So it will be a period of 6 months and you would do it roughly ahead of this period. So we assume that you already have a very concrete work plan for this period. If you would realize 3 months perhaps after you have started that some activities you have intended for an event that was foreseen, for example, in the last month of the implementation period are skipped because the event will not take place, you should do an amendment of the assignment and you should explain and you should lay down how you recalculate the extent. But you should be aware that this shouldn't count retroactively. So it is really, you cannot change figures ex post. So here then this amendment would start, would count with the date you are resigning it, you are assigning the revised assignment. But there will be some further guidance on the project assignment, on the template itself, and on the calculation provided soon. And we will for sure provide some more details on that and how to calculate and how to proceed then in step 2, where you would have to reconsider it at least partly for the budgetary calculation. And finally, there will be a lead applicant seminar then after the approval of the projects, where we'll come back again to it and will be available for any detailed clarifications.
Yes, because I actually see some worries regarding the fixed percentage. Looking at the question, we have actually one again, which I just show, but maybe again it could be addressed then in a second moment. Someone was asking, can fixed percentage of the employee be changed between reporting periods? What about within the reporting period? So like some worries really regarding like plans that should not maybe stick to the reality then.
From one period to another, for sure. So it is, I think, in most cases, or in very many cases, that an employee is not involved with the same extent for the whole project implementation. And as you have to establish assignments for each period, you would recalculate it for each period again. And it might be that you have 40% assignment in period 1 for one employee, and then 60% in period 2, and only 20 in period 3 or whatever. So this is for sure reasonable, and it should be well documented, but in most cases, I think it's easy traceable and shouldn't be any problem. Yes, so here there is flexibility and within a period, as I mentioned already with this example. So only if there is really a change of the activities foreseen or already clear, and this would have severe consequences on the extent of assignment, an amendment of the assignment should take place within an assignment period.
Mm-hmm. And to stay a bit still on this note, we have two questions regarding project assignment. One is what to do with the assignment if the person joins the project after the start of the reporting period.
Then the assignment would start with the starting date of the employee. So here, this is one of the cases, and I think it's clearly stated in the eligibility rules that there are some deviations possible if they are well justified, and this is a well justified case. So if a person starts to work only in February, even though the reporting period starts with January, it's clear that the assignment period would start with February only, and this wouldn't be any problem.
Exactly. And I assume that with this one, then we should conclude the part regarding the 6 monthly assignment, which is we have one question asking a bit clarification. What does it mean in detail description? I guess it's what was before referring Wolfgang. An example of that would be useful. Does activity number or deliverable number suffice?
Okay, so it means detailed description of the activities.
Exactly.
Yeah. So here it should refer, I think, to the application form and to the work plan. And there is also a section in the application form where the project partners can specify which activities they are intending to implement. So they connect it to the application form. That would be one recommendation, but it still should, I guess, in most cases be more detailed, because the application form as such is not informing on detailed tasks of employees. It's just the general activities a partner, so the whole institution intends to foresee. So there should be the reference to the related activity, but then there should be a further specification on the concrete tasks for this period the employee would implement with regard to the respective activity.
Exactly. And last thing, I think, regarding staff costs that we have, at least that I see so far, it's is it possible to have employees with time involvement of 100% on the assignment for a specific period?
For sure. You could even have staff contracted for the project implementation only. What would mean that you would have anyhow to fill in the project assignment for each period, but it would always be the 100%. For sure, this is possible. It is even recommended not to have 10 or 15 employees with a very low level of assignment involved, but to focus it on 2, 3 or 4 staff members. And in best case, there is really specific staff allocated to the project in full. So this is possible, and I would even say it's even positively acknowledged.
Thank you. Now we have, I guess, 10 minutes, let's say. So I hope that we'll manage to go through all the other questions. I will start with those which are referring to other cost categories. And for example, I have this one. What is the exact difference between equipment and infrastructure?
Tricky question. I would say equipment is mobile, so it's something you can take from one place to another, whereas infrastructure is a fixed investment on something. It's a road, it's a building, so it's nothing you can take away and bring into your office building. Equipment might be also a big instrument where you would need 2 or 3 persons to carry with, but at the end it's something that it is not fixed somewhere on the ground or whatever. So this is the main difference, I would say. And equipment therefore really are not that, usually not that cost intensive, whereas investments in infrastructure is more cost intensive.
And on another note, we go to the auditing costs. So where can we allocate auditing costs in any of the activities listed, or shall we list an activity and financial reporting activity in the first thematic work package?
For this period, in fact, it is that the work plan is not that completely connected with the budget of the program. So we do not have the separate work package on project management anymore, for example. So here it is anyhow, we know what project management means. There is a description also foreseen in the application form, but it's not a single work package. The audit costs were somehow part of this work package management so far, but they are anyhow, we know that you have to implement the first ever control. In most cases, you have to pay for it. So where you should foresee the costs is in the finance plan, but there is no need to have a specific activity in the work plan allocated on that. In the finance section, audit costs would be part of the external expertise and service costs. And then depending on whether you have a flat rate option or not, you may indicate the estimated real costs, or they would be covered by the 40% flat rate. So here I think no need to very detail it in the activity, to have a separate activity on that, because also the activities itself are limited to a certain number. So you cannot foresee to have that many activities, and the work plan itself in the application form should really focus rather on the content than on the administrative part of the project.
Mm-hmm. One question, one step back regarding equipment. We have someone asking if depreciation period of an equipment is within the project duration, total equipment cost is eligible.
Yes, that's the case. So
exactly.
If the depreciation period is shorter than the project implementation period, the full purchase price is eligible. If under the condition that the equipment item was already mentioned in the application form and it is properly traceable from the application form.
Jumping to observer, can the cost of observer be reported?
Depending on which kind of costs you refer to, but yeah, observers do not have a specific role as regards the budgetary implementation of the project. They are not co-financed, they are not obligatory, even mentioned in very details. So here, if they have some external expertise and service they bring into the project partner could finance them for that. So if they are, for example, attending to a meeting and doing a content-related presentation, bringing in an input and an added value to this meeting, it could be agreed in advance. So there would be this need to have a contract that the related costs are reimbursed by the partner, and then the partner could ask for a co-financing. So it would be then reported as external expertise and service costs, and a co-financing would be possible as long as the conditions for this cost category are met, what means that there need to be a contract, an invoicing procedure, and so on.
Thank you. I would then now go to one question regarding travel and accommodation, which is this one: for travel and accommodation flat rate, do we not even need to prove that the travel occurred?
Exactly, no proof for any of the expenditure related. So you would receive the 10% independent on if you had travels in the period or not.
Exactly. I'm trying, if fine with you, Magdalena, maybe I'm thinking since we do still have some question, we maybe can still go on about 5 minutes, and in case we can skip the quiz that we prepared for the end, if fine with you. So maybe it's a bit more important to still answer to some question. So I will take a few more. And this one regarding preparation costs, where can the preparation costs be included and how, if on the level of the project and not PP?
For the preparation costs, there will be a specific subsection in the application form where the applicant has to select the single partners that shall receive a part of the lump sum and indicates already the shares. So here there will be a specific section dedicated on that in the GEMS application form. And this will be part of step 2. And there will be also a guidance on that so that you are really aware on how to proceed.
Exactly. We have then 2 questions which are somehow referring both to possible budget redistribution. One is this one. So what happens if a partner withdraws from the project in terms of cost calculation and funding redistribution? And then I will tell you also the second one.
If a partner withdraws, your project would have to submit a request for change, and then it would have to revise the work plan and the financial section accordingly. So in the financial section, you will have to allocate your budget to the single reporting periods. So it's clear then that for the partner, those one where it will not participate anymore will have to be removed. So there would be no funding on that available. The partner would still be in as long as the project was already implemented and it already provided an input, implemented activities and reported expenditure. But it would be limited to the period where he was participating, and the intended activities that have not yet been implemented and will finally not be implemented by the partner and the related budget would have to be excluded from the application form. And then there are further possibilities if they are reshuffled in the partners and the related budget and activities are shared among the other partners that are still in, or if there is entering a new partner, or if the activities will be skipped at all.
And one other question more on the basis of reallocation of budget shifts, basically. If we choose cost option A, are we allowed to do minor budget shifts?
Option A means the one on the real costs, or if I remember right. So here, I think, it will be clear there will be always the possibility of budget shifts. There is already a fact sheet developed on that. It will be published, I think, in 1 or 2 weeks at the latest. And there is flexibility given. There is a lot of flexibility given, in fact. So there are no restrictions as regards the work packages, shifts between work packages, as we do not have any financial budgeting on work package level, so on separate work packages. There is also flexibility given on the cost categories. There is only a limitation as regards the flexibility on partner level. So here we do have this 20% rule and 10,000 euro, I think. Wolfgang, please correct me if I'm wrong.
It's 20,000 euros, 20% or 20,000 euros.
Whatever is the lower amount, so here.
Exactly. I will maybe try now to take the last 3 questions. If we manage to give a quick reply to all of them, it would be nice. And then for the other ones, I assume that we can either follow up in FAQ or take them into account, because some of them I see one is a suggestion. So basically we should be able to take still 3. One regards procurement. So would it be possible to report the cost of a legal expert assisting in the setup of the correct procedure?
Yes, there is legal advice. One of the activities that could be co-financed via the external expertise and service costs category. For sure the preconditions would have to be met. So it really has to be necessary for the project and so on. But generally, yes.
Exactly. One question then we have about national requirements are mentioned in the manual, but no info is available. Are there submission an eligibility issue? Where are they listed?
There are no eligibility issue, so it's not that the national requirements would be part of the application package to be submitted via GEMS and to be submitted within this given deadline on program level. So it's something running in parallel. I know that the member states are already working on those national requirements, but they would be differently for the single member states. Some of them will not request anything, I think, for step 1, for example. For sure, we will be able to provide you with that information soon. So there will be an information on the website, I guess, mid of February at the latest. But it will not be an eligibility criteria.
Mm-hmm. Yes. And on a very general note, someone is asking what is the status on the work program? When will the EC accept it? Will there be any changes? And if so, which changes? Worst case timing after submission?
Nothing to be worried about, I would say. So the Commission is currently not in the position to approve any programs, as there are still some implementing acts pending, or one implementing act pending. Anyhow, we have already received some observations. These are only tiny ones, nothing serious, nothing that would result in a considerable change of the program document. So we assume that the program document, so the IP, will be approved in spring, for sure ahead of the final approval of the project that is foreseen in June.
Exactly. And having this said, just one comment, there is one question regarding the template of the project assignment. Yes, we will make sure that it's not problematic like it was in the previous programming period. And then I don't know, Magdalena, if you can see the basically last 3 questions that we have on the screen at the moment. Like, feel free to either quickly reply to them if you wish, and if you think that we still have a bit of time. Otherwise, as I said, we can follow up on the FAQ. So up to you for these 3.
Yes, very short perhaps for the reporting periods. Yes, we will have the approach for classic projects of 6 months. Might be that the first reporting period and the last reporting period deviate, but generally 6-monthly approach is still there. Cost for consumables, depending, I think it depends on which kind of consumers. Part of it might be covered by the flat rate office and administration. If it is really an external event and there is a caterer, it could be under external expertise and service costs, but this is really depending then on the respective expenditure item. And overtime costs allowed to be reported in gross salary. This is a tricky question.
I assume that normally, like, it depends also from the normal practice of a company, like if it's normally paid and it's basically stated in the contract that it should be paid, it's normally eligible, otherwise not. But maybe if you have this kind of question, it would be nice to get in touch also with the FLC before submitting the costs in order to be 100% sure that it's actually eligible.
Yes, for sure. So here I think it is really depending on the single case, how it is documented, how it is regulated in the contract, and also partly on national law. And it will always be the first level control body to finally confirm the eligibility of expenditure or not. So here it is for sure advisable to consult also national level. But if you have more details and doubts on that, you could also address us directly. But a specific, now a concrete yes or no, I think is hard to give without any more information available.
And for sure only pro rata with the assignment percentage. That's for sure.
Exactly. So yes, for the Slido part, I'm quite happy because we managed to answer to all the questions that were raised today, and so I guess I can give back the word to you, Magdalena, for the closing.
Yes, I would like to thank you, Wolfgang, for your input, and Elisa for your interactive support and for bringing in the questions that have been raised in the Slido. I hope that you as audience have learned a lot about the new program rules, and especially the eligibility rules of the new program period. Please stay in touch with us in case you have any additional questions. You could always address your ACP, the JS or the MA. There will be further possibilities to raise questions in upcoming events, especially then during step 2, where you really have to do a detailed calculation of your budget and where the one or other question may pop up again or be more detailed than it was now. So I hope that this Q&A session was of added value for you, and wish you a nice day and all the best for drafting your project proposals in step 1. And please keep in mind there will be a further Q&A session on the 10th of February where you will be provided with more information on the GEMS. So thanks a lot, see you soon and all the best to all of you.